What's going on, guys? Welcome back to the Journey to $1 Million series. My name is Adam Reiser, and in this series, I am documenting my journey from starting off with $1,300 in starting capital at the beginning of 2023 to, eventually documenting my way all the way up to having my own fund with over $1 million assets under management. And so this series is the 24th video of the series, which is crazy. Kobe video, but I've got some disheartening news to share with you all today. My $500,000 account is blown. I breached the daily limit as well as the overall equity drawdown limit within my challenge account with the $500,000 account with Surge Trader. And this account I've been trading for the past 6 months. I was kind of facing some ups and downs and learned a lot over the past 6 months. But today it's officially gone. And so I breached the equity and it's officially no longer within my possession. It was a $4,400 investment. And within that investment, I have learned a lot about myself. And I've got a journal entry that I'm going to share with you guys. But we're going to go over the details of the trades that caused me to lose this account today and the setup that I was looking at and really just the unfortunate development of this trade idea and how it all came to be. I got my dog back here as well. She's just like, oh my gosh, can't believe that I did this. So overall, we'll go through the trades and I'll give you my download afterwards. So I will share with you my screen here. So as you could see here on GU, we did end up holding this area that I was anticipating last week. If you remember on Thursday, within my video number 23, you saw that I was anticipating a potential retracement based off of this structural area, ended up coming down to this structural area, which is actually a more favorable Fibonacci retracement level. My overall analysis is that I'm anticipating a pretty big bullish move upwards. Just happened to have a little bit of a choppy week going down last week, which I just recorded the video for. If you go back to the 40-minute video before this one, and over traded a little bit last week, but I had the right idea for this analysis. This was also based off of the DXY. So as you can see, the DXY, if I share with you my screen, you can see the DXY was rejecting this area right here. Previous support. Now it turned resistance because it broke through, came back up, retested this support, which is now turned resistance. And it's also the 50% Fibonacci retracement level. So you have a little bit of confluence here, right? And of course, if you have a bearish candle like this, signals potential weakness and reversal. And so this morning, I will share with you my analysis on GU. But if you look, you can see that we had a little bit of a push to the upside before a massive sell-off. And on the daily time frame, that's where you see this wick right here. I have seen this move many times within other markets, not just on the DXY, where if you've got the rejection, usually you have a nice little wick coming up before continuing on to the downside. And that's when a lot of sellers come in and just push the price down. Buyers get hopeful that it could potentially, this was a little bit of a fake out, and the sellers just come in and just take it down. Now, of course, it can't happen the other way, but the higher probability is that it would keep going down and you've got a very low risk trade opportunity right here. Now, unfortunately, I can't trade the DXY, but what I can do is trade the pairs that go off of the DXY, the dollar strength index. And so I was looking at multiple different pairs. I was looking at GU, EU, gold, and also gold, EU, and GU. And as you can see, this is a little what's it called? There's a lot of numbers here, but if we go down the lower time frames, first of all, we'll share this. So as you can see, there was a really nice bullish doji candle rejection off of this structural support area. And so I was like, okay, this is going to be a potential buy candle today. That's why I was looking towards the buy during for today's session. And if I zoom down, you'll see that we basically just kept going upwards and upwards and upwards. This was the rejection from Friday that bought into this demand zone down here off the 61.8% retracement on the higher time frames, which is right here, 61.8% retracement. So I was anticipating some buys moving upwards, and I had the right idea. I just improperly traded it, and that's going to be the theme of today. If we zoom down to the 30-minute time frame, you'll see that we had this little bit of choppiness. This is the 61.8% retracement that was rejected on Friday. And then we had this bullish move upwards going into the Monday. Monday, we had a little bit of choppiness, as you could see during the London session. We were failing to break through this area, which is actually the 50% retracement to the downside and previous structure. And so we were failing to break through. Actually, let me see what exactly it is to the downside. So to the downside, that is the 61.8% retracement to the downside here. And we were failing to break through to the upside, upward direction based off of this previous support, now turning resistance with this downward move. But we had higher time frame confluence aligning in the direction for a higher time frame upward move. And so the shorter time frames, we're trying to hold that zone, but the higher time frame prevailed, right? That's why I like to focus on the higher time frame analysis. Unfortunately, on GU, it needed a little bit of a push down before making that move up. And during this congestion period is where I got caught up in the trade. So if we go down to the 15-minute time frame, you'll see that, so we could zoom in a little bit more. You could see, my trades, and you can also see them right here. So I was following the markets. I like to trade a little bit later on Mondays just because the start of the New York session on Mondays can have a lot of chop. And so I was trying to wait for the chop to be cleared up. And of course, also, I know that after 9 a.m., after the 4-hour candle closes, I usually have a little bit more higher probability of success. So knowing that, I waited until about 10 a.m. to start trading. So you can see my first trade was opened up at, this is 10:11. And at 10:11 is when we first had this last rejection of this support area, of this resistance area that I was showing you about on the higher time frames. And the reason why I had placed this position right here is because I was too patient, right? I wanted to wait for a little bit more confirmation before entering in my buys. A better buy would have been most definitely right here and ride this initial position up, about, what is that, 12 pips, catching a nice solid win to start off the day after rejection to the downside, and using this candle as an opportunity to scale in or go for another trade after taking profit or not taking profit and scaling in and catching this move. And so overall, to kind of summarize, I was too patient here, which turned into passiveness. And that passiveness caused me to feel FOMO, fear of missing out, on this move, which ended up happening because of the higher probability of it going up off of the higher time frames, right, which is the daily time frame. So this bullish candle I was anticipating because of this bullish candle closed doji right here off of the previous structure and the 61.8% retracement. So we had confirmation that this was going to be going up. I just scaled in a little too early and placed too many trades too early before the actual move was happening. And so if I were to go down to my actual web trader terminal here where I placed my positions, you could see that I opened up my first 25 lot at the rejection area, which is probably not a smart idea, and I immediately lost money. But as you could see, I lost money right at the bottom of the wick, and then it came back up. And so me not being patient and starting to get me being too patient and too passive to miss this initial move, I started getting a little aggressive here because I wanted to capture this move that I knew was coming. And so I opened up a larger position, a 65 lot here, arguably very early, chasing this move. And so I opened up this position, and as you could see, this position was the stop loss was placed below the structure of the fake 5-minute support that was forming right here off of this previous rejection on the lower time frames. And I basically got wicked out to the tick, really, before a massive move upwards. And this is when my emotions started taking over. I opened up another lot, a larger lot position at the break of this 5-minute candle, thinking that this was going to go up. And this trade actually ended up going up about $2,600 in profit before rejecting within a 5-minute candle and immediately coming back into the drawdown. At this point, I was already down $6,000 in the day. I probably should have break even this position out and been a little bit more patient and waited for a better entry. But I didn't think this was going to go down much further. So I set my stop loss below this level. And as you can see, it faked me out, took me out at my stop loss. And then the next 5-minute candle just shot up and moved upwards. And I knew that this was going to keep going up. I just had a very high, strong feeling, a higher probability of this continuing to move upwards, even though this was a little bit of choppiness. The higher time frames were closing pretty favorably, right? Blue candle, blue candle, blue candle. This was that was during this 30-minute time frame. So we did have this large wick going up, which is not really the most fundamental sound for a bullish move in the upward direction in the lower time frame, but we did have that confluence going from the higher time frame. So it was just lower time frame chop, right? And I got lost in that lower time frame chop. As you could see here, I opened up my final buy at the bottom, thinking that this was going to be the structural area that supported on the minute time frame. If we were to go down to it on the minute time frame, just so you could see this, the position was actually entered right here, where my initial stop was placed, but I got filled up here. And because I only had a couple $1,000s left in equity to play with for the day before my account was hitting the max drawdown for the day on Surge Trader, it wicked down not even 2 pips from my entry, which was supposed to be here. I got filled it up here. I can't stress that enough. If I was actually executed the appropriate price, my wick, this little wick would not have taken me out at the or would not have closed out of the position overall, because I didn't manually close this position. Surge Trader did. And following the next minute, right, it just launched upwards and then continued on to have that massive bullish move. Now, if you look here at my take profits, every single one of these take profits were based off of the higher time frame analysis. And that was, to go up to basically right here. And this trade would have been a $3,000 trade. This trade would have been a $20,000 trade. This trade would have been a I believe it was like $25,000 trade, $28,000 trade. And this trade would have been almost a $30,000 trade. And I missed out on this massive move. This would have been almost a, what is that? 430 to 731, 22,000, $23,000 trade. So maybe a little less in terms of the overall profits, but these would have been multiple 5-figure trades that I just completely messed up because I got caught up in the lower time frame price action and not really focusing on the higher time frames and allowing the trades to breathe a little bit. And so what really screwed me over on this trade idea was the fact that I was too impatient, and as a result turned into passiveness here when the opportunity was really prevalent. As soon as I saw this 5-minute candle break and close bullish above, that should have been an opportunity to buy into. And then I watched this entire move happen to the upside, knowing that this had as much potential as it did based off of my higher time frame analysis. I was targeting the 122,750 area, but my take profit was a little earlier than that because I wanted to make sure that my take profit would actually be hit and I wouldn't fall short a little bit, right? And so the biggest, I guess you could say the biggest mistake I made on today, this trade, unfortunate $1,500 loss. This trade was another unfortunate $4,800 loss, $4,500 loss with the commissions, $4,800. So put me at negative $6,300 for the day. This trade was the one that caused me to be able to not be able to capitalize on the move, because this is the trade that caused me to lose all the equity I had in the Surge Trader, my $500,000 account, to force close based off of drawdown equity breach on this position. And this is the position that I needed to have a little bit more wiggle room in order for it to run upwards and make all of the money back and then some. And so what's crazy is that this could have had a much different outcome if I was a little bit less patient here and a little bit more aggressive, right, when the opportunity was supposed to be there. Even if it meant scaling my 25 lot here and having a pretty tight stop loss of just $2,500 loss risk, right, and a potential scale in here after the retracement, because that's what happens in the lower time frames, right? Things just don't move straight upwards unless there's some sort of macroeconomic event driving it. And so to kind of unpack all this together, this had a massive potential that I ended up just not being able to execute properly on. And as a result, and my confidence and my analysis and so forth, I just improperly traded it, and I lost my $500,000 account. If I were to go down to my accounts, let's see, inactive accounts. If we go to here, my $500,000 account, dashboard, accounts. Let me see here. If I can go, I don't know if I can see it anymore. Yeah, because I lost it, unfortunately. If you remember from my previous video, I had the account had to get to $473,000 for me to blow it. I had about 487,000, 486, I believe it was, in the account before I could lose it all. And unfortunately, I had the rate trade. It was a really high success rate, high probability trade idea to be able to make back, and also, not to mention, just catapult my success with this account. And I just fumbled the ball. And so it was a massive learning lesson for me that I'm going to be taking advantage of for moving forward. And you'll see the title of this video as the end of an era and the beginning of something new. As you can see, I do have my $1 million account with Surge Trader. Surge Trader only allows you to have one real main account at a time. You can't copy trade between multiple accounts, so it had to manually trade between both these different accounts. And so this is overall probably a positive in the direction I do eventually want to take my management of funds towards. But in the short term, it just stinks losing an account that you've had for so long. And so I'm going to actually share with you my journal entry for today. And let me go to notebook and go to my journal. So as you can see, it was the worst day ever that I thought I had the correct analysis and bias, but I incorrectly traded this idea and blew my $500,000 trading account. This account taught me a lot, and I can't stress that enough, and was definitely worth the $4,400 investment I paid to invest into this account. I had this account for 6 months, and within that 6-month period, I've learned many different lessons, including how if you go back, I had a very pretty strong selective bias towards the buy side, which I've massively improved with. As you can see, I've made money with shorts over the past few months, and I've definitely eliminated that bias almost completely. I have also created the importance of following trading rules and creating trading rules and following them, disciplinary measures if I break those rules, the importance of consistency, patience and execution, trusting my bias and analysis, right? Becoming confident as a trader, when to trade, and my most profitable timeframes and sessions, right? After 10 a.m., after that 4-hour candle closes at 9 a.m. Eastern time. What setups are the most profitable for me to trade, right? Not just arbitrarily placing trades, but basing them off of higher time frame analysis or higher time frame structure, right? A lot of these things came in from me investing into TradeZella, which is what I'm showing you right now. Not being afraid to place trades, which is something that I probably should have done a little bit more holding back on today, right? Aggressiveness, becoming a little bit more aggressive, compartmentalizing my time and focus for trading, right? Not letting my business affect my trading hours, not letting my trading hours affect my business, showing up every single day. Sticking with the higher time frame analysis, not getting caught up in the lower time frame analysis like I did today. Fewer executions, usually resulting in more profits, right? If you remember back in the initial videos, I was probably placing anywhere between 5 to 8 trades per day. Now I'm down to maybe 4 to 5 trades per day on average, right? Even and that's a lot for me. So I've definitely cut back on the amount of loss on the lot of trades that I've traded or that I placed. And also, of course, the importance of marking up charts and forecasting to be able to anticipate moves and capitalize on them when they present themselves. And so, at the end of the day, there's a lot of emotions flowing through me right now. Losing this $500,000 account is obviously sad, because I had big visions for this $500,000 account. And of course, how this trade played out and how I could have played it so much better. This had the massive potential for being my biggest trading day ever. And especially since the chart did move in my favor as a reoccurring theme over the past week, I've been pretty accurate with my overall bias. I've just been, improperly executing on them. But what I am taking away from today is that it's more positive than negative. And we are going to be starting up my $1 million account this week. And, I've got some plans and some strategies for this $1 million account that I'm not going to go into too much today, because I don't want to overburden this video. But just know that I have a great mindset about me, and that I'm very excited for the lessons that I've learned with this $500,000 account and applying it towards this $1 million account right here. And so Let me see. Overall, guys, lots of learning lessons from today. If you want to see my journal entry, my written journal entry, you could see here, this journal entry, this is the last recorded journal entry I'm going to have for this $500,000 account, because unfortunately it is gone. I had a negative $17,855 balance reported today. Total of 4 trades, 0 wins, 4 losses, on average about $4,463.75 on average. What I did well is I executed based off my analysis. I had my analysis and I executed off of it. And my trade idea wasn't invalidated, and I kept trying the trade idea. Arguably, I could have tried it at different opportunities that were presented to myself, knowing that on lower time frames, there's just a little bit more fluctuations that align with the higher time frame trade. So what I can improve is not being too patient, turning into passivity. And missing that first entry opportunity, which caused me to feel FOMO and missing out on the big move. And as a result, that's what allowed me to, or it opened up the door for me to kind of get a little bit more emotional and not thinking as logical. And then, of course, not letting that passiveness turn into too much aggressiveness at the wrong time, right? And scaling in at inappropriate times. Not letting my emotions turn into overtraining and leading to a blown account. I promise you guys, and you can mark this on your calendars, today will be the last day I ever blow a funded trading account or a challenge account. Now, what I learned today is that my patience turned into passiveness, which caused me to miss out on a move, which caused me to have emotions for missing out on the move. And as a result, I became aggressive at the wrong times. And then I got caught up in the lower time frame analysis and just not focusing on the higher time frames, which were, forming beautiful buy candles, that I just got caught up in that chop up and down. Of course, also my stops were placed at really in just really unfortunate positions, because as soon as they would get hit, the market would just reverse and go up anywhere between 8 to 15 pips, which of the lot sizes I was trading is significant money. And so just a lot of unfortunate scenarios occurred today where my stop loss kept getting a hit and the trade would keep going on the direction that it was intended to go. Of course I would post an L on the P&L because the stop loss was triggered, and as a result, it posted that as a loss on the day. I also got too aggressive too soon after letting passiveness not allow me to enter. To kind of recap on that, and of course, the biggest thing I learned today is that my trade ideas are excellent. I just need to start capitalizing on them. So, what I've learned from this $500,000 account is that I've got a very good idea for where charts are heading into, as long as I keep forecasting and predicting correctly, and then anticipating that movement and then just capitalizing on them. So that's the, here is the capitalizing on them. Here's the predicting and the analysis and, understanding with the market direction. Now I just have to link those two together, and I believe I'm going to see a lot of success. And so overall, $500,000 account gone onto a $1 million account. This is a small hiccup in the journey. This is part of the process, right? There's going to be a lot of frustrations in trading. I could have the right idea like I did today, but just the market didn't move favorably for me during the times that I did trade. And then after I had lost my account, the market ended up moving in the direction that I was thinking that it was going to move into. And so overall, guys, learned a lot from this $500,000 account, and it's sad, but also at the same time, I got to look forward, and I'm very, very excited for the future of my success as a trader, and the potential that I've recognized within myself as a result of this $500,000 account, playing with larger lot sizes. I got that taste of using larger lot sizes. Now I'm going to have a lot more equity to be able to play with this $1 million account. And we're going to see success. I promise you, this next video that I record at the end of this week, going over my results that I trade with my $1 million account. I think you guys are going to be very excited to see the results, and as well as I am excited to see, the posted results that result as a result of my applying all these rules and these lessons I've learned, and now from my $500,000 account into this $1 million one. And so I appreciate you guys for tuning into this, this quick video, and a little different, but of course I'm trying to be as transparent as possible, and sharing you with all my ups and downs as I, progress as a trader and eventually become a fund manager that I dream to be. And so thank you so much for tuning in. I always like to leave off on this is that you guys, if you have a dream, go after and realize it. You're capable of more than you think you are. And I believe in you, whether you believe in yourself or not. And so I appreciate you guys for tuning in. See you guys in the next video at the end of this week, and I will see you guys soon. All right, bye-bye.